Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday morning pre-market webcast. Okay, quick look at the daily, then we'll hop on the hourly. When we spoke yesterday morning, and then I did another video for you guys midday because I really wanted to lay out how things were coming together off of that 47 low and then up into the 67.5, which was the pre-FOMC price. So what we're left with is kind of a trading range between 22.47 and 22.67, 22.68. Does that range get broken through today? I don't know. What I do know is the band ride's over. 47 has been really solid. You can see it there on the daily chart. If the bulls are going to make any headway, they've got to get over 67 and get up now and do new highs and try to re-engage the upper band. The Bears had a good Wednesday afternoon, but when we got down yesterday into the 51s, I mean, they really, they kind of laid down and they did their thing and they squeezed them all the way up to that 67.5 area. Now they held it in there at the pre-FOMC price where they had to, and they worked it back down. But in working it back down, they couldn't really conquer 57 to 60. Let's get over on the hourly. They couldn't really conquer 57 to 60, and they haven't been able to figure it out overnight. You've got an overnight low. You got a Globex low coming in at 56.5. So this whole 57 to 60 area is going to delineate the day for me. If the bulls can stay above 60, they can go back to work on this pre-Fed price up at 67.5. That was the lower high. You got the Fed reaction high. You've got what is essentially here a double top. If the Bears can maintain this as a lower high for the entire day, don't test it, don't mess with it, leave it alone. If you preserve it all the way through until Sunday, you can see things lining up for a little bit of a deeper move. Now, you cannot take the Bears seriously until they break 47, okay? And you can't take the Bears super seriously until we start spending a day or two below wherever next week's weekly pivot comes out. If the Bears start to convert those kinds of key areas, then there's potential to head back to the daily midband as early as next week. If they can't execute on that, then you're going to continue to see these dips bought. You're going to see higher lows, higher highs, and eventually that 73 will give way. But you can start to see the case being made for some potential to come back, but they've got to preserve the double top. They've got to preserve these lower highs. They have to convert something that matters. Really, all they're doing now is when they go up, they're kind of holding serve. Okay, yeah, we let you go up, but we didn't take out the 73. So you got to give us a little bit of credit for that. We went all the way down to 43, but then we blew it, and we came all the way back to 67.5. But we didn't give up the pre-FOMC price. So that's a lower high. So we kind of we held it in there. And then we tried to take it back down to 47, but we couldn't even accomplish that, and now we're back up into 64. So forgive me if I don't get all bared up for you. Now, I'm not bulled up either, not on the day after a band ride ends, but band rides don't last forever. And, people will say, well, okay, are the bulls vulnerable now? Not really. It's the Bears that are the most vulnerable right now. And you saw this back in 2013, the day after a band ride ends, there's a little bit of a pullback, and we saw that, except it's making higher lows. If the bulls find it within them to squeeze up and re-engage that upper band, that's what I call a secondary band ride. And those can be the mother of all squeezes. So I would encourage the Bears to really try to hold this range from 47 to 67 and at least be able to spend a couple of days without engaging the upper band. Don't lose 73 today. Don't lose 67, 68. Even if we just chop around today, that's good for the bears. The bears just cannot give up new highs. If they give up new highs, it's going to chase a lot of shorts who came in on the double top on the Fed reaction. It's going to chase them out. And we know how that goes. We've all seen that movie before. So 47 to 67. 60 is a key area in the middle. Keep an eye on daily pivot, 58 and change. And if we do get down to 47, see if they can convert. And then we got the weekly pivot coming in next week, and we'll take it from there. Everybody have a fantastic day. Have a fantastic weekend. If you've had a good week, it's been a good week in the room. A really good week in the room. If you've had a good week, be picky about your setups today. Control your size. Control your risk. Don't give your week back. Don't do anything really dumb on a Friday to give back the other 4 days of hard work, okay? Check us out on Twitter, @Princetontrader. Check out the website, Princetontrader.com. Come check out the chat room. I'll be back Monday morning with another webcast. Trade 'em well, everybody.